Hello, guys. I came with a question first of all. Have we ever thought about why is it in the financial market or some financial assets are easy to buy and sell, why some take forever for even such assets to be able to cash out money? Have you ever thought about it? Well, I'm here to tell you for free, so you have to listen. It is because of liquidity. As a new beginner, I know you'll be wondering, what is liquidity? What is liquidity? In today's episode, I will having a breakdown approach to what liquidity is. Once again, it's me, Promise Peters of the Derivatives FX, and in today's episode, we'll be talking about what is liquidity, various types of liquidity, and importance of liquidity when it comes to financial market and financial trading. So guys, stay tuned as we dive into this beautiful episode together. Don't go anywhere. So guys, on our previous episode, we spoke about who is a broker, what a broker does, importance of choosing the right broker. And I remember I spoke about different factors we need to consider when picking a broker. So if you are coming across my video for the first time and you are thinking of choosing a broker or coming into the industry of financial trading, the first thing you need to do is to get to know your broker, know everything about your broker and what it entails, so you don't end up picking up the wrong broker, because it affects your financial trading as well. So guys, what is liquidity? We can simply say liquidity is money, or how quickly an asset can be measured, or how quickly we can get cash off an asset. It can be any asset. Let me give you a simple illustration. Take for instance, you have 100 iPhones to sell, and you got an information that for you to be able to sell those iPhones at a fair price, you have to move from point A to point B. You moving from point A to point B, I'm using this A and B illustration because it will be easy. You moving from point A to point B is you moving from where there is no liquidity to where there is actual liquidity. So for you to get to that place, it will enable you to sell those phones at a good price and easy, without any constraint, without any trouble, without any delay. I don't know if that illustration is understandable to you. So liquidity is a very important aspect in the financial trading because it determines the efficiency and effectiveness of trading. When it comes to liquidity, you have to be very careful as a trader because it requires patience, waiting for liquidity, waiting for price to get to area of liquidity. Just like the example, the illustration I gave, you having iPhones. If for instance you're not patient, you went to sell those iPhones, you will sell them at a price that maybe is not favorable to you as the seller. So for you to have that fair price, it's for you to take those iPhones to a point where the buyers are. When I say buyers, I mean BUYERS. For you to get a fair price off those assets. And when we're talking about the concept of liquidity, it does not apply to only Forex. It applies to all financial assets, be it fixtures, be it options, be it commodities, be it crypto, Forex, any financial asset at all. That is to tell you how important liquidity is when it comes to financial trading. First of all, the overall of them is market liquidity. A market that has no liquidity, traders tend to run away from such market. So market liquidity is the overall buyers and sellers that are available in the market at a particular time. A liquid market tends to enable traders execute trades easily and at a fair price. There are major currency pairs that are highly liquid due to the popularity in the market. Examples of those currency pairs are GBP JPY, GBP USD, Euro USD, and so many other pairs. If you don't know about currency pairs and you want to know about currency pairs, why not you go back to my videos and you find a video where I spoke about different types of currency pairs and how to trade them in the financial market, how to know those currency pairs in the financial market. That will be very, very helpful to you to go back to my videos and watch those videos again. It will be important for you to know that in the financial market, liquidity can be seen in various ways. But today we'll be discussing about 3 major types of liquidity. Number 1 type of liquidity is the structural liquidity. Mind you, I'll be explaining these types of liquidity and also with a diagram illustration for a better understanding. Structural liquidity can be seen as those type of liquidity that exists below or above significant swing point in the financial market. That is structural liquidity. So guys, let's have a diagram illustration of a better explanation of the structural liquidity so you understand. Diagram illustration of a structural liquidity, and I want you guys to pay attention to this video. Over here we can see that price is making higher high and higher low and showing a break of structure before making a higher high. So above this high that is here is where liquidity is. This is where liquidity is, just here. You see, price went from here to tap and grab liquidity here before creating a lower low. So that is a simple illustration of structural liquidity. Before we go into the next type of liquidity in the financial market, if you are coming across my video for the first time and you like what is being discussed on this channel, please guys, why not subscribe to my YouTube channel so that we grow together, we educate people together. Don't forget to smash the notification button so that you get notified whenever I drop episode by episode like this. Also, you can comment freely on the comment section any question you have concerning financial trading, concerning financial asset, financial market, and I'll be gladly give you insightful response, insightful explanation on any questions. Also, share this video to those who feel to be of interest to, and also don't forget like the video. So guys, let's go to the next type of liquidity in the financial market, which is the buy side liquidity. A buy side liquidity in the financial market is a type of liquidity resting above a range or a swing high in the financial market. I don't know if that's understandable. A buy side liquidity is a type of liquidity that is resting above a range. A lot of people will be asking, what is a range? In the financial market, there are 3 types of movement. We either have a downtrend, an uptrend, or a ranging market. A ranging market is a market that is not either moving up or moving down, rather moving sideways. Not making a new high or a new low, but just moving sideways, consolidating, making the same high, the same lows, and all that. That is a ranging market. So buy side liquidity are liquidity that are spotted above a range or a swing high in the financial market. We'll be having a diagram illustration concerning a buy side liquidity, but we have to know that this kind of liquidity gives selling interest to sellers, and it is very significant because traders have placed different type of orders above the range. For example, stop losses, traders having buy limit in that zones, sell limit order, and various other orders are placed on those zones in the market, on those areas of the market. So price tend to take out those orders before going to its appropriate or destined direction. We don't know where the price is going actually, so we can say destined direction. Remember, I said we have a diagram illustration of a buy side liquidity. This is what it looks like. So we can obviously see the market is ranging from here, this point, not making a new high or a new low. You can see stop losses are taken here, and it went back without making a new high. Then watch what price did. Price went up. That is from here. From here, it went up to this point where several orders have been taken out. That is where liquidity has been grabbed. We call it liquidity sweep or liquidity grab. You see, price grabbed the liquidity in that zone and then started moving down to the destined direction, like I said. So guys, I hope this illustration is understandable and insightful. So we go to the last type of liquidity, which is the sell side liquidity. Stay tuned, guys. What is a sell side liquidity? A sell side liquidity in the financial market, this is a type of liquidity that is resting or that exists below a range in the financial market or below a swing low in the financial market. And this type of liquidity initiates buying interest to buyers. And it is a very important point in the financial market because of these zones tends to be where traders place different type of orders, like I said in concerning the buy side liquidity, stop loss order, sell limit, buy limit, and various other orders. So price always goes down to those zones to take out those orders in order to move to the appropriate or destined direction. Remember, like I said from the beginning, what actually moves the market is liquidity, except there is an incoming news. But take the news off the market. Liquidity is a very, very important aspect when it comes to financial trading, when it comes to the financial market. So guys, don't sleep on this. It is a very important concept. It's very important, and it's a very broad concept when it comes to explaining what liquidity is. I just decided to take my time to have this little explanation. Illustration of a sell side liquidity. So let's do it this way. Over here we can see the market is ranging from here to here, see, from here to here, without making a new low or a new high. Then what will happen? Market came down to this point. You can see where it's easily noted the sell stops resting below old lows, liquidity hunt, and all that. So you can see that boldly price moves straight down to this place to take out those orders, your sell stop orders, your stop loss order, your buy limit orders. Take all those orders before moving up to the destined direction where it ought to move up to. So guys, this is a simple illustration of a sell side liquidity, and I hope you find this illustration very easy and understandable. Like I said, nobody knows it all. we are still learning when it comes to financial trading. I will gladly tell you that I am still learning. I am learning. Every day I invest into my knowledge. Every day. And it's coming out well. This will bring us to the end of today's episode, and I hope you find this amazing episode insightful and educative. Like I always say, I don't know it all. We can both impact ourselves, as you being a financial trader or you coming into the financial world, financial trading. So guys, like I said, if you are coming across my video for the first time and you find it very educative and insightful, please subscribe to my YouTube channel, and after that, don't forget to smash the notification button so that whenever I drop episode, you'll be the first to get notified. Also, like the video if you find it interesting. Just like it. Comment below any question concerning financial trading, and I'll always be there for you. I'm here to serve, not just to make money. And share this video to those you feel it will be of interest to, so that both you and I will be educating people out there. Thank you so much, guys, and bye for now.